Okay, peeps, welcome back. So today we're going to be going over the underlying stocks for the YieldMax ETFs. Just so you all know, this is not going to include the funds of funds or the universe fund or whatever it is. So we're not going to do YMAX, YMAG, or UTLY in this video because those hold multiple positions. We're just going over the single stock ETFs. So with that being said, let's get it. So we're going to start with Coinbase here. Coinbase, I would say, is probably fair value. As you guys can see, this resistance has turned into support. That makes sense because, of course, Bitcoin is going to all-time highs. For those of you guys that are more into the YieldMax ETFs, not so much into the actual crypto itself, Coinbase is going to go up with Bitcoin. Keep in mind, 5 of the major finance giants who got their spot Bitcoin ETFs approved have Coinbase as their custodian of their assets. So that's also very bullish for the price of Coinbase. But for those of you guys that just want the dividends, you don't care about the crypto, but you want the crypto exposure, so i.e. the price appreciation and the increased dividends, this is important stuff to know. So let's get back up here real quick. So the target move on Coinbase is basically $300 to about $370. You guys can see the high over here, way over to the left, roughly around $430. Keep in mind, Coinbase IPO'd in basically the middle of the bull run of 2021. As a matter of fact, shortly after they IPO'd, we had a 50% crash in Bitcoin, which was the middle of the bull market parabolic phase of that cycle. So a lot of upside room here. I would say Coney is probably a fair buy right now. Not expensive, not cheap, just somewhere in the middle. So Coinbase potentially 18 to 42% from here. For those of you guys that actually want to swing trade the actual underlying stock, support is 210 to 226. So Apple, this is an interesting one. I would say that now is actually probably a good time to start picking up Apple. Why do I say this? Well, if we go back on, or not Apple, well, either Apple or APLY, but we're talking about YieldMax here. As you guys can see, it's very, very rare, extremely rare for Apple to sell below this red EMA here. You can see 1, 2, 3, 4. Of course, this was, these were the bear market lows here. And this was also bear market lows. So 3, 4, 5, 6 now. 6 times in the last nearly 5 years have we seen this below the red EMA. And keep in mind, 2 of those were during a bear market. 1 of those were during a pandemic. So during bullish times, we've actually only seen 3. So basically 50% of all the moves. So this is a very rare occurrence for Apple to get below support and or the EMAs like this. I would say it's a great time to pick up some APLY, not financial advice, but it's not a support. But again, a breakdown on Apple is extremely rare. So as you guys can see throughout history, it pretty much only ever goes up. But anyways, if we were to go ahead and do the measured move from where it is right now to resistance, it's roughly about 1% to 8%, and then back all to the all-time highs is 15 to 18%. My main thesis behind this is that there is potentially a breakdown going on here in Apple, which means it could be getting pretty cheap. Therefore, Apple could be getting cheap. So if you were to buy in now, you could potentially be seeing massively increased gains and dividend appreciation in the future when this thing does bottom out. It could bottom out here at 166. That's possible. If it goes any lower, maybe 150 or support. So from support at 117 to 127 up into the resistance, potentially 40 to 48%. I don't think it's going to drop that low, but we'll just have to wait and see. Amazon, this is a little more expensive, in my opinion. It is in resistance. We're not seeing any real massive move here, although this could actually be a bull pennant. Let's draw a little pennant here. So kind of something like that. If it were to play out, we'll just say from the swing low here, that's probably where the pennant would have started. To a breakout point, this thing could go up to $208, but again, this is expensive. There are cheaper options out there. If you want to buy this one, that's entirely up to you. So if it does get a pullback into support, though, your support's going to be somewhere between 136 to 150, and the measured move up to the resistance between 170 and 189 could be anywhere from 18 to 32%, so pretty good move there. Google, this one has kind of been a real laggard. Did have this monster move up in 2023, but as you guys can see, we're having a pullback here. This could potentially be a double top too, which means cheaper Google prices might be coming, or it could bounce. We don't know. This is a doji candle right here, so the market hasn't made a decision yet, but support is 124 to 132, resistance 144 to basically about 152. If we assumed it was going to bounce here, 6.5% to 12%. If we were going to assume that it's going to bounce somewhere around the EMAs and support, 12% to as much as 18%. Disney, I would say that Disney is really cheap, so therefore the DISO is also very, very cheap. I would say DISO is probably a good one to pick up right now. Main reason being is because we're at the bottom of this massive drop here. As you guys can see, if we measure it, it was a pretty large drop. Overall, 62%. The cutting of the dividends for Disney, and then the drama going on between the CEO of Disney and Elon Musk, and the bear market, and just all kinds of nonsense. So, anyways, so we do have another bull flag here, a bull pennant. If we actually measure that move from the start of the flag, this is a smaller one, but it is still a bull pennant nonetheless. The target would be up at $132. If you decided to get in now, you could make anywhere from 3% to 10% to 20%. If it did pull back into support, though, from this resistance, you could be looking at somewhere between roughly about, I'd say, 38 to 47%. So support down here is between 77 to 88. The important thing to keep in mind is this thing appears to be at the bottom of its move. This is multi-year, almost a decade-long support here, and we are having a bounce up at this point, so DISO could be a good one to buy into. Meta is really, really expensive, as you guys can see, especially after they smashed earnings and announced their dividend. It's just been straight up. Even more so, look at this. This is also another bull pennant, believe it or not. This is the third one we've looked at so far. So the target move on this bull pennant, and this is on the weekly, this is the highest time frame we look at typically, just so y'all know, is a huge move. It's all the way up to $620 per share. That could happen, okay? Or it could pull back. So if we get a pullback into support, which is from 346 to 380, you could be taking a look at potentially as much as, to get to the all-time highs, 38%, or if you get up to the bull pennant pattern, assuming that it doesn't just play out right away, as much as 70% move. I would say FPY is a little expensive at this point. I'd be waiting for a pullback, but of course, if you buy the net now, the dividends could be bigger, but then if the price drops, the shares are going to drop. So understand that that's a risk. Microsoft also looking a little bit expensive. It is still holding this trend line and also support. It's at all-time highs. We would not buy this YieldMax ETF right now because of how expensive it looks. So 350 to about 370 is support. Resistance is at 420. 420. No, we do not smoke weed, guys, or do anything like that. We don't even smoke cigarettes. So 17% would be your potential move up there. I would say that MSFT is a little expensive right now, and so is MSFO. Netflix a little bit cheaper. You guys can see we broke out of this bull flag and we've moved up since. So the current resistance is between 695 and 565. There is a possibility this thing could pull back into the EMA somewhere, because keep in mind, this is a resistance zone. We're in a resistance zone right now. Last time I got into the zone, obviously you guys can see, even though it was in a bear market, it was a huge drop. So we'll just say you picked it up probably somewhere around these wicks right here. Could be potentially good support. That would be around $450. You'd be looking at as much as 25 to 53%. I would say that Netflix is probably slightly above fair value at this point, so not cheap but not expensive. NVIDIA is really expensive right now. We've actually been waiting for a pullback on this one to get more. This is a somewhat bearish looking candle. This is what's known as a shooting star with a long wick at the top and a small body at the bottom. The wick generally needs to be at least, I would say, 65 to 70% of the entire candle, which it looks to be. However, this is a green candle, so if it closed red, I would say that's super bullish, or super bearish, I mean, but it closed green, so maybe bullish, maybe bearish. We'll just have to wait and see, but this is a shooting star. That's typically a bearish candle. If a pullback is to happen, it would be a pretty large pullback. Don't know that it's going to pull back that much. It might just pull back to the yellow EMA here like it's done previously, so 17%, or as much as potentially 42%. That's a possibility. So if you wanted to wait to get into NVIDIA or NVIDIA with support between 470 to 500, you could. The measured move here would be pretty large. Just on NVIDIA alone, you'd be looking at roughly about 100%. So let's measure that again. Yeah, so almost 100% move. Tesla, this one is really cheap. We did have not that long ago a rare buy signal on Tesla where basically the daily RSI hit the oversold territory, and then we had a golden and a bull, basically a golden cross on the RSI and the MACD, which we've only had 3 times over the last 5 years, so very bullish. Although it does look like it's going to keep dumping, we want to see a pop out of this channel. I would say Tesla and TSLY is extremely cheap right now. So immediate support's going to be basically between 168 to as much as potentially as high here as roughly about 242. So if we take the measured move just to get to the top of this support range, you'd be looking at 24% all the way to the top of the channel. Would be about 40%, and 64 to 78% up to 312 and roughly about 285, which is absolutely a possibility. I would say Tesla is extremely cheap right now. Square is also extremely cheap. As you guys can see, the high was at 290. The current price is at $80 a share, so that's a 3x from where it currently is, or a 3.5x. We're still in this channel, as you guys can see here, but it does look like we actually did have a breakout recently. And I'm actually going to zoom into the daily here real quick to see if this is potentially actually a confirmation. It's a little hard to tell, but that looks like it might actually also be another bull flag, but we'll just leave it as it is for now. So it's breaking out of the channel. If it busts out of this resistance, the next resistance zone is going to be all the way up here. So let's take a look at what those measured moves would be. So if you bought in at the top of the channel, $78, you could be potentially looking at 5 to 15%, and then a massive whopping 81 to 91% move on this. Do keep in mind that Square owns some Bitcoins, so when Bitcoin goes to the moon, y'all could be seeing Square and SQY go to the moon. So I would say SQY is relatively cheap right now when comparing it to the underlying stock. So we got quite a few more here to go. So MSTR, this thing has just been absolutely ripping. As you guys know, Bitcoin's pushing against all-time highs right now. I would say this thing is very, very expensive, but if you wanted to jump in and assume that MSTR is going to go to 2,000, 3,000 bucks, which is possible, because when Bitcoin pushes all-time highs, the value of the MSTR stock is going to go up because MicroStrategy owns 200,000 Bitcoins. So the stock and the price of Bitcoin will move synonymously. But if there is a pullback, you guys could get in on the dip. It would be a massive pullback. So if Bitcoin drops, do be prepared for this. Could be as much as 62%. If it was going to have a retest, I would say it would have a retest somewhere in this area right here. So 40%, maybe down to roughly about 50-ish%, somewhere in there. I mean, it could just keep pushing up. You guys could just slowly DCA in for the dividends, because I'm sure it's going to pay some massive dividends in April. I would not doubt it. But We're basically waiting until after the YieldMax ex-dividend date to potentially pick up more MSTY and kind of just see what the price does in between now and then. So very expensive MSTR is right now, but Bitcoin, again, if it goes to 150K, well, there's no telling where MSTR could go. ExxonMobil, I would say this is at fair value. So not really sure. Oh, right. This is potentially an inverse head and shoulders pattern, as you guys can see here. It's a little hard to tell, but you got your shoulder there, head there, and shoulder there. That's a bullish pattern. The target is the bottom of this resistance. So I'd say Zomo's at fair value, not expensive, but not cheap. So support is between 84 to 96, resistance between 115 to about 120. If you were to pick it up now, which I would say now is probably fair value, potentially as much as 6 to 12% appreciation. JP Morgan, very expensive right now. It's which is interesting because the Fed's rates are at all-time highs, so you would think this stock would be cheap since that's generally how it works, but it's not. It's actually quite expensive. So I would say this one's a little expensive to buy right now, but that's just my opinion, of course. So support between 167 and 164. The measured move, if you got in at the bottom of support, which in my opinion is still really not that cheap, potentially as much as 12%. So this one is more interesting to me. So ARK Innovation ETF is extremely cheap. Let's just do the measure move here to show y'all. Extremely, extremely cheap compared to something like JP Morgan or MSTR. It's still down 68% from all-time highs. So we had a break of this macro downtrend finally after what seemed like eons. And we're pushing up against resistance here. We are creating higher lows and higher highs successively, as you guys can see here. If this continues, we will break resistance at some point. The next level I would say that potentially could serve as resistance is way up here. So between 68 to about 78, you can see all this price action here. So if this flips to support and you decided to get in here on, let's say, OARK or even ARK, 34 to 54%. Something to keep in mind with the ARK Innovation Fund. Okay, they're invested in everything future technology, so that's very bullish because that's the next wave of tech. I mean, you guys all saw what happened with the internet, social media, cryptocurrency, online banking. I mean, I could go on and on and on about the different tech evolution that we've seen, but I mean, the future tech that they're investing in pretty much says it all. The upside for this fund, in my opinion, is potentially limitless. And keep in mind something else. They also own Tesla and Coinbase within their ARK ETF. So by buying OARK, you're actually getting exposure to both CONY and TSLY automatically. With less potential risk because, again, it's an ETF, it's not a single stock. And OARK also has a spot Bitcoin ETF. So they got Bitcoin exposure. Keep that in mind. This is very cheap, in my opinion. I would say now is a great time to buy, not financial advice. AMD is very expensive. Again, it's running on the AI narrative. After we saw this break of this trend line here, just a massive, almost scary looking move up. We kind of had like this almost what looks like a flag here and then a breakout, although I did not catch that one last time. We've been more focused on crypto lately. It's pretty expensive right now, but I would say if you got in between 157 to potentially 181 as support, let's just say you got in somewhere in the middle, roughly about a 30% move. Again, this is a little expensive, but if AI is going to keep being the narrative for years on end, then this thing potentially could just keep on going up. PayPal, PYPY, in my opinion, based on the chart, is very cheap. As you guys can see, we're not even close to the all-time highs. We're about 5x off the all-time highs, so we're down still 80% on PayPal. This thing does appear like it wants to try to break out of this falling wedge. Again, the falling wedge target is the top of the wedge, so $100. This thing is very cheap. I would say PYPY based on this is extremely cheap. So you could be taking a look at potentially 42 to about 75% in the immediate short term. Moderna, this is the MRNY one. This one is also extremely cheap in my opinion. I actually am I'm going to move this trend line here because this is a bigger breakout potential here. Actually, if we do this, you guys can see it's actually a downward channel. So the target for the downward channel would be the top of the channel. So $217 would be the potential target here. A falling channel is a generally bullish price pattern. For those of you guys that know trading, you know how this works. So if you got in now and held till the top, 72 to potentially 110%, obviously that could mean a lot of upside for the price of MRNY. So as an added bonus, we'll do KWEB. It's still within this falling wedge. The price target is the top of the wedge, so $36 roughly. The price is currently 25. That would indicate about a 45% move. Obviously, that would reflect in the price of CLIP. Even if it only went up 20% in CLIP, that would still be, what is the current price of CLIP? Like $15, so about about $3 in appreciation. So push it back up to about 19. Something else to keep in mind is every time we've seen a break of any of these downtrends, there's been a massive move up, as you guys can see. We're currently in that position right now. And anytime that KWEB has bounced off of the support, it's been a massive bounce, as you guys can see every single time. Bounce here, bounce here. I guess you could call this its own bounce, and then bounce here, and we're currently in support now. So in my opinion, CLIP could be ready to really seriously have some major upside potential. So anyways, this is the underline for the YieldMax ETFs. Hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.